The Okanagan housing market has just changed, and most buyers haven't really noticed it yet. What if I told you that there's actually fewer homes for sale than there were a year ago? Interest rates have come down slightly, and we are in the full spring market right now. And yet, sales are actually down. That does sound strange, right? But that's exactly what happened across most of the Okanagan in May. Hi everyone, I'm Reners with Remax Vernon Salt Fowler. And today, we are diving into what has happened in the North Okanagan, the Central Okanagan, and also the Shuswap. We are going to look at the market for the month of May in 2026. And if you're buying or selling right now, these numbers tell you really important information. Let's talk about the absorption rate. This is the demand to sell ratio. And they have come in at 17.47 in the North Okanagan, 15.21% in the Central Okanagan, and 17.04 in the Shuswap. What's interesting in that in all three markets, they're relatively the same, not a big jump between any of them. What this means is that we're sitting in a balanced market, kind of in the middle ground, where buyers still have options, but good homes that are priced well and show good value, they're still moving. That's actually one of the healthiest markets that you can be in. Let's look days to sell. And speaking of moving, homes sold in 51 days on average in the North Okanagan, 50 days on average in the Central, and 60 days in the Shuswap. That's actually pretty quick. It's not pandemic quick, but it's not multiple offers in 6 hours quick, but it's definitely quicker than many people expected considering all the economic uncertainty that we've seen. Now let's talk prices, because if you've been waiting for some dramatic correction, well, you're probably still waiting. On average, residential prices have come in at $794,034 in the North Okanagan, $1.11 million in the Central Okanagan, and $770,574 in the Shuswap. The median prices were $745,000 in the North, $928,900 in the Central, and $736,500 in the Shuswap. The takeaway: prices continue to show remarkable stability. Even when buyers have been cautious, even when the economic headlines have been creating a lot of uncertainty, even when sales were slowing, values are still holding slightly depending on the bracket you're in. The big story: inventory. This is where things get interesting. Listings were down significantly in the North Okanagan. They saw 404 new listings, down nearly 18%. The Central Okanagan had 1,157 new listings, that's down more than 15%. Only the Shuswap bucked the trend with 311 new listings, up almost 4%. Now, let's look at total inventory in the North Okanagan. It dropped from 1,622 homes last year to 1,532 today. For the Central Okanagan, it dropped from 4,480 homes to 3,980. That's a huge decline. Meanwhile, in the Shuswap, it rose 1,058 to 1,140. So the buyers shopping in Vernon and Kelowna actually have fewer homes to choose from than they did a year ago at this same time. And that's probably not what most people would have guessed based on what we'd seen historically. Quick pit stop. Make sure that you like this video and subscribe to our channel, where we are dropping new videos like this one every single week. And remember, whether you're looking to move in 9 days, or maybe 90 days, or just curious about the area that we call home, be sure to call, text, or email us, and don't forget, just add salt. Waterfront. Let's jump out into the water, because Waterfront always tells a story of its own. Year-to-date Waterfront listings are 37 in the North Okanagan, 84 in the Central Okanagan, and 57 in the Shuswap. Compared to last year, for the North Okanagan, it slipped slightly to 39. Central Okanagan dropped dramatically from 116, and the Shuswap remained virtually unchanged. So waterfront inventory is actually tightening in some areas, yet sales haven't exploded. Year-to-date waterfront sales are 6 in the North Okanagan, 14 in the Central, and 17 in the Shuswap. Last year, those sales numbers were 8, 18, and 9, which means the Shuswap is quietly becoming one of the strongest waterfront markets, almost double the waterfront sales of last year. Let's talk sales. Now here's the surprise. Sales were down across every region. The North Okanagan sales fell 6%. Central, they fell 3%. And for the Shuswap, they fell 13%. Residential sales followed the same trend. So if inventory is down, interest rates were lowered, and homes are selling relatively quickly, why are sales down? Because buyers are being selective. They aren't buying just because the rates had dropped. They aren't buying because someone told them the prices might rise. They're buying when the home is right for them, when the value is there, when the property checks all of the boxes. And honestly, that's probably healthier than what we've seen for a few years. For months of inventory, they came in at 9 months in the North Okanagan, 8.7 months in the Central, and 10.2 in the Shuswap. Those are still buyer-friendly numbers, but they're not extreme, which brings us back to the same conclusion. We are in a balanced market. Selective buyers, stable prices. The buyer takeaway: if you're thinking of buying, this might actually be one of the better times and the better markets that we've seen in years. You're not fighting over 15 offers, you're not rushing through, you have time to think and time to inspect, time to negotiate. But don't mistake that for weakness. The best homes are still moving, and they are moving quickly. If you're a seller, the lesson this year could be clear. The market is rewarding value, not optimism, not wishful thinking, value. The homes priced correctly and marketed properly, they are still selling and seeing offers. The homes chasing yesterday's prices, they are sitting, and the longer they're on the market, the more the buyer questions the home. So to summarize May in one sentence, the market isn't getting hotter, but it is getting smarter. Buyers are picky, sellers need strategy, and homes that bring those two together are actually the ones that are selling. And what happens next may depend less on interest rates and more on whether buyers believe it's going to continue to stay the way that it is.